Tesla finally gave its US and Canadian-based customers and fans the updated Model 3 we've all been waiting for. This was dubbed Project Highland. Came out in Europe and China earlier this year. Been waiting for it, or earlier last year. It's got a revamped exterior, new suspension, which I heard is a big deal. Rides better, better control, better handling, a new screen in the back, better seats, things like that, all for the same price of $38,900. So I'm actually surprised it kept that same price, but I don't know about, I think it might actually move the needle there for Tesla. Model 3 was getting long in the tooth. I think it's gonna help for Q1.
I'm curious if this is just something that people that already own Teslas are excited about, and maybe they go out and buy a new Tesla, versus does this bring new consumers into the Tesla market, right? Or because it seems like right now, at least from what I saw online today, a lot of the Tesla community is excited about this. And we know the Tesla community is very outspoken online, and I'm glad that they're excited. That new car looks pretty similar to the old Model 3 to me. It's still got that big fat back that I never really liked.
I'm fascinated by how much you hate
I think it's just a little
like
ugly.
Every other car to me.
I just think it's pretty ugly.
That looks
Tesla.
like a car to me. I don't understand.
No, I mean, it looks like a car. That's great.
Like,
then I think it's going to sell like a car, and like Tesla probably needs it to sell better than a normal car is sort of my point. I don't know. I expect more out of Mr. Musk and Tesla from a design standpoint.
That's fair. That's fair. I'm still waiting on the cheaper version. That's what I feel like, Praz, I'm coming to you looking for them to get that market share on, is if they can have the cheaper model out.
Well, that big fat back, I mean, maybe that'll help the Q1 numbers.
All right, we got to go find one of these new Model 3s to take a spin in with Praz.
All right, welcome back, everyone. I don't know why they always do this, but welcome back to another live stream. Hello, John. How are you? Hope you're having a wonderful day. Now, if you just caught the little this on the new refreshed Model 3, ugly, looks pretty similar. Well, I didn't really hear a lot of criticism about pickup trucks, right? Because pickup trucks have looked the same for decades and decades. Jeremy, hello. I think it's the first time he watches my videos. Shame on you. Shame on you. But anyways, I wanted to show you this news right here. Exclusive Tesla Berlin to suspend most production for 2 weeks over Red Sea supply gap. Breaking news, apparently. Which I think we can see this right here a bit better. So, according to Reuters here, Tesla will suspend most car production at its facility near Berlin. Between the weeks January 29 to February 11, the company said on Thursday, citing a lack of components due to shift in transport routes because of attacks on vessels in the Red Sea because of the Houthi terrorists backed by Iran. The US electric vehicle maker is the first company to disclose an interruption to output due to the disruption. Many, including Geely, China's second largest automaker by sales, and IKEA have warned of delays delivery. So they say here, the armed conflicts in the Red Sea and the associated shifts in the transport routes between Europe, Asia, via the Cape of Good Hope, which is South Africa, are also having an impact on production in Grünheide. The considerably longer transportation times are creating a gap in supply chain. I believe it's an extra 9 days or something like that. Plus also the fact that you cannot put as much on the boat as you would used to, because they need they cannot have as much cargo on the ship because they need the fuel to go around South Africa. So yeah, maybe that's why we've seen weakness in the stock. We'll see. We'll see what happens. Tesla closed the day down. Well, it's closing the day down 2.88%. We had seen a little rebound towards the end of the day, but then when that news broke out, it dipped a bit lower. We also have some positive news with regards to Tesla workers. They are getting a boost in pay in the US factories as UAW momentum builds. I think this is just for the headlines. Tesla workers have been compensated quite nicely over the years. Well, thank you, Yoni. First-time viewers here. I love it. I love it. Maybe they should show me some love a bit more during the years. But yeah, some people are busy, I guess. Anyways, what else have been happening today? So basically, we've had let me zoom in a bit. We've had the stock market dip towards the midday, and then all of the indexes here have recovered to close the day pretty flat-ish. The reason for that is the CPI number. So that came a little bit hotter than expected in December, driven by housing. So let's have a read here. The CPI index advanced 0.3% in December, exceeding the 0.2% rise expected and accelerating from the 0.1% increase in November. Not such a big deal, by the way. I'll explain in a bit. Shelter contributed the most to the increase, accounting for more than half of the monthly increase. On a year-over-year basis, the measure rose 3.4% year-over-year compared with the 3.2% increase expected and a plus 3% prior to that. I'll skip all of this to touch on what's highlighted here. So the rise in shelter inflation isn't cause for panic, according to this analyst here. Shelter inflation accelerated to 0.5% month over month from 0.4% in November. Again, not such a big deal, which is 67% of the total increase in core CPI. However, the BLS data showed that the new tenant rent index is back to the 2 to 3% annual rate, and this is the leading indicator of future shelter inflation. Thus, we can expect that shelter inflation will fall over the next 6 months and keep the disinflationary process intact. The December CPI data does not affect the Fed's expected monetary policy easing and thus bodes well for the stock market. Of course, start of the day, stock market did not really believe in that, but we'll see when those rate cuts happen. How many of those we'll see in 2024 remains to be seen. Last thing here, the December CPI report, which captures sticky service sector inflation and a stubborn owner's equivalent rent, illustrates that expectations around a March rate was always premature. Yeah, always premature, always this or that. I mean, they have been wrong previously. I love you too, Yoni. I love you too. They have been wrong previously. We'll see what happens. Again, with this whole inflation CPI thing, you have to look at it from two stories. One, if it comes down too fast, then suddenly you'll see headlines, oh, it comes down too fast. Fed will have to act even harsher because we're going into a recession. If it does not come down as fast, then suddenly you see headlines, oh, inflation is back, rate cuts are off the table. You can't win like this. Just look at what's happening. By the way, these are lagging indicators, but right now what we're seeing is, to me, much better than the two other scenarios I just mentioned. And so let's have a look at what the stocks have done today in the watch list / portfolio. I'll start with the ones that are the most in red, and that's Coinbase. Are we surprised? Not really. Buy the rumor, sell the news type of scenario with the Bitcoin ETF. Unity down 6%. You could have traded that thing and made quite a lot of money, up 10%, down 10%. I mean, this thing has been up, down, up, down, up, down. Same with Lemonade, by the way, down another 3.3%. Yesterday it was up 6% or something like that. SoFi down another 3.71%. Hood is down as well. Basically, the fintech are taking a hit. Stocks that are so-called related to crypto are taking a hit as well. Tesla, as we've seen before, is taking a hit. Palantir down 0.7%. Now we're reaching those that are basically flat-ish throughout the day. For those that are green, Netflix, I believe that's because of the positive news with regards to the ad-supported tier, I believe. We're going to have a look at that in a bit. Adian up 1.94%. Roblox is up. HIMS, Ultra Group, Baba is green. Congrats. Amazon keeps doing its thing. BTI, Nvidia, PayPal, Microsoft, all of that are green as well. Now, with regards to Netflix, I believe I saw something. Let me find that real quick. Netflix as well is quite a comeback story that needs to be looked at closer by all the skeptics out there. I think Joseph Carlson tweeted something out, posted, should I say. So yeah, he said Netflix now has 23 million ad tier subscribers. That's an increase of roughly 8 million in about 2 months. So quite remarkable. Quite remarkable. John here says PayPal green surprisingly. Yeah. I mean, I guess when it's beaten down so much, sometimes it's a contradicting trade. But yeah, nice to see it being green, but not really moving much in the last couple of weeks, days. Can't wait for PayPal earnings. Same here. PayPal earnings plus the earnings call, I think, is going to be an interesting one. I don't think you have to have such high expectations with PayPal going into the first quarterly earnings right now. I'm more interested in what they are about to guide and what their goals are for 2024, because I don't think a lot has changed in just one quarter. Margins are probably expected to be lower for this quarter, not by much, but I think it's going to be a little bit lower. Again, he only had one month to work his magic, so we shouldn't really blame him if things aren't as perfect as expected just yet. Let's have a look here. PayPal. Yeah, up 6.1%. The last 6 months, it's down 11. Last month, it's up 3.76%. Okay, so not much. Now, I want to switch the focus to this headline right here, which was also quite strange, right? Rental giant Hertz dumps EVs, including Teslas, for gas cars. Let me just eat. I mean, doesn't make that much sense, but let's have a look. So they say here, rental firm Hertz Global Holdings is selling about 20,000 electric vehicles, including Tesla, from its US fleet about 2 years after a deal with the automaker to offer its vehicles for rent. Another sign that EV demand has cooled. This is another BS excuse, because if that was the case, then Tesla's Model Y wouldn't have been the best-selling car in 2023, and BYD would not have been so successful either, selling all of those cars. But okay. Hertz will instead opt for gas-powered vehicles. I mean, talk about 1 step forward, 2 steps back. They cite here higher expenses related to collision and damage for EVs, even though it had aimed to convert 25% of its fleet to electric by 2024 end. The CEO had last year said at the JP Morgan Auto Conference, flagged headwinds from higher expenses from its EV, particularly Teslas. Hertz even limited the torque and speed on the EVs and offered it to experienced users on the platform to make them easier to adapt after certain users had front-end collisions. I mean, what kind of drivers are those? It's the same thing. 4 wheels, you brake, you accelerate. So yeah, I think it has to do with people that rent at Hertz more than the cars itself, but okay. Chefs is a company which also operates vehicles from the Swedish EV maker Polestar, among others, fell about 4%. Tesla stock was down about 3%. Hertz also expects about $245 million in charges related to the depreciation expense from the EV sale in the fourth quarter of 2023. Now, again, this is just ridiculous. So we have your comment from Adam Jonas from Morgan Stanley. He says here, Hertz move was another sign that EV expectations needs to be reset downwards. Interesting, that's what I said in my last week's Tesla weekly video, resetting our expectations for the year. While consumers enjoy the driving experience and fuel savings per mile of an EV, Jonas said there are other hidden costs to EV ownership. Expenses related to collision and damage, primarily associated with EVs, remained high in the quarter. That's true. That has been a problem for a while. But okay. Anyways, here I continue by saying the things we already know. But what is interesting to me is this right here. This was in August 2022. Hertz CEO says their Teslas are saving 50 to 60% on maintenance cost versus ICE vehicles. So what's the deal here? What has happened? A year and a half ago, he was saying they're saving half. Now they're saying it's not worth it. Let's go back to ICE vehicles. Very strange. Very strange. He said here, I'll zoom in a bit. He says here, regarding the maintenance cost, the company said it is saving 50% to 60% when compared to ICE vehicles of its fleet. On maintenance, I think Kenny said to you, we are running kind of 50 to 60% of what maintenance costs are on ICE vehicles. That's roughly in line with where we are. If there's anyone surprised, okay, it's probably a slightly higher expense on tires, but not much more. And that's embedded in the figure I'm giving you. So again, I am still trying to figure out what happened. Either Hertz drivers are very, very bad drivers, or I don't know. Honestly, I don't know. Oops. Yeah, I'm muted. Yes, I'm muted. Anyways, I basically said I posted this on X. These are the answers. The most logical answer here is from Paul. Maintenance, it's cheaper, but since Elon has accelerated depreciation by continuing dropping prices, this was the next move. Again, this is just an excuse because I don't think we've had price cuts in months, right? Unless I'm mistaken, or at least not as big as before. I think the major price cuts were in the first half of 2023. So yeah, okay. And then this guy here with just the dumbest answer of the day, but okay, he also holds he owns Disney, Rivian, Paramount. So yeah, not really going to take that one serious. But yeah, interesting move. I would love to hear what Rob Maurer has to say about that later today. Always interested in his point of view on things. Pretty good thoughts. If anyone listening wants to share his thoughts on this, let me know. In the meantime, let me find you something I wanted to show, which I seem to have closed the window. I seem to have closed the window. Okay, never mind. Instead, let's look at DocuSign. DocuSign was up 9% today because, well, of a huge jump at the end of the trading day. They jump on reports that two PE firms competing to acquire. There have been already some rumors that some private equity firms wanted to take this company private. And here, yet again, there are Bain Capital and Hellman and Friedman are competing to acquire the provider of online signature services. The company has a market cap of $11.4 billion. And yeah, I mean, if we look at the stocks, the company's performance, let's see. DocuSign, up. Yeah. In the last 3 years, the stock is down 75%. Not great. In the last year, it's up 5%. In the last 6 months, it's up 20%. In the last 3 months, it's up 45% or so. Now, of course, this company did get a huge push from the pandemic, just like any other company that provided you solutions for stay at home, work from home, work from anywhere. But after that, growth decelerated. This company has also overhired. I believe I saw it had 7,000 or over 7,000 employees. I mean, why do you need over 7,000 employees for a company that provides you digital signatures? Of course, there is also document cloud and stuff like that, but it didn't make much sense to me. Which is why we've seen something like this. Yes, it looks pretty cheap right now compared to its 5-year mean. I'll give them that. But that's because it was not that profitable before. Free cash flow per share has increased over the years. And if we look at basically what has happened, is this revenue was not really an issue for them. This is per quarter for revenue. Free cash flow, that's per fiscal year. Let's put it like this. So again, this was a story of mismanagement of a great product, great company, just mismanaged, maybe too much euphoria, in my opinion. So yeah, if it goes private, okay, congrats to them. Right now it has 26 analysts, 14 of those have a hold rating. Average price target sits around 3% lower than where we're at today. Yeah, interesting. If you take it private, now it's $12.5 billion in market cap after that jump. Yeah, I don't think the employees will be that happy unless it goes private, maybe at a premium or so. But interesting. Lots of companies also don't need to be public, right? Lots of them should have stayed private, but of course, since probably their investors, their employees have gotten some stocks, then eventually you have to go public. But okay. We have some more news, some continuing news here with regards to the same BS story as always. AT&T and Verizon dip as EPA seeks meeting on lead cable data, which led to AT&T and Verizon drop over 3% during the day. So this is an old story, of course, we covered that last year. So right now, the telecom letters start a new phase of the EPA's investigation after its probe found more than 100 soil and sediment readings with lead above safety guidelines at lead cable sites in 3 states. This is lead that could be concerning. I like the could be concerning, based on factors like exposure and pathways into the body. The agency has asked companies to discuss granular sampling data. We've covered this already before. Unless there's something new, I doubt this will affect AT&T and Verizon. They've already debunked the claims, but I guess it makes for good headlines. So yeah, we'll see how this develops. Again, I don't think this will affect your dividend payouts or stuff like that, but never really great headlines, but okay. Other than that, it was a pretty, let's say, quiet-ish day. Overall, unless I missed something. Of course, there was this whole Bitcoin thing. I'm already tired of hearing that. It's as if people have suddenly discovered this new digital currency. But yeah, I don't know. I know why people are constantly talking about that, because it makes for good clicks, some views, and etc. But other than that, there's really nothing there. So there is that. Yeah, there is, okay, Paul here, the guy that gave the only good, let's say, reasonable answer. So he says here, Hertz could make EV rentals much more attractive by installing a supercharger on site and removing the policy that EVs have to be returned with a full charge. At the end of the rental, people are in a rush. Much better if they could drop off the car directly. I agree. That's also why you have pump gas stations near the airport, near rental places. So if you forget, you just go and then drop it off. And still, it's still very early days with the EV adoptions. Hotels, restaurants, etc., stadiums. The adoption will take time to have superchargers or just chargers in general at all of those locations. And then probably sentiment will change. In my opinion. What are they talking about here? The housing market. Okay, let's have a listen just a bit.
Markets for first-time buyers in 2024. For more on that report, we're talking to one of its authors, Realtor.com chief economist Danielle Hale. Danielle, it is good to see you. So you all surveyed potential first-time home buyers, Danielle. What do they have to tell you as we head into 2024? Are they feeling more optimistic?
Absolutely. So first-time home buyers told us that they were, in fact, very optimistic. 61% said that now is a good time to buy a home, per our recent Realtor.com survey. And while affordability continues to be a challenge, even though we've seen some improvement as mortgage rates have come down, 95% of prospective first-time home buyers feel like they'll be able to afford a home within their lifetime. 40% saying they're going to be able to afford it within the next year. So first-time home to afford it within the next year. So first-time home buyers are bringing a lot of optimism to the market. Home buyers are bringing a lot of optimism to the market in 2024.
Hey, Danielle, it's Julie here. How should people think about the sort of up and down that we've been seeing in mortgage rates, right? Like, yes, I know the longer trend is a little bit down, but there's some volatility there. So how are home buyers approaching that?
Yeah, the volatility can make it really difficult for home buyers to plan to purchase, because it's really hard to set a budget when mortgage rates are moving up and moving down. So my recommendation or advice to consumers is to really try to rate proof your budget and consider a couple of different scenarios. These can have pretty wide-ranging effects on your budget. If you were to compare, say, October's high of 7.79% mortgage rates with the low that we saw at the end of December, you're looking at an $80 a month difference for every $100,000 that's borrowed. So it's worth it for homebuyers to consider how much swings in mortgage rates will impact their bottom line and how it will impact their bottom line and how aggressive they want to set their price target when they're searching for a home. Can they extend their budget a little bit if mortgage rates tick up more than they expected, or do they need to cut back on their price target so they have some flexibility if mortgage rates do move higher?
And Danielle, when you surveyed potential first-time home buyers about that issue of affordability, what do they have to tell you?
Yeah, so buyers are optimistic about their ability to afford to purchase a home, and the drop in mortgage rates is no doubt fueling that optimism. So they do expect to be able to afford to buy a home within the next year. And so that's one of the reasons why in our best markets for first-time home buyers report, we looked at areas that offer housing affordability. We took a look at the price to income ratio, especially for younger households, which tend to be first-time home buyers, as a good indicator of affordability in an area. But then we were also looking at things like the availability of homes on the market, the presence of restaurants and nightlife and culture activities that young people like to take advantage of. And of course, with return to work being a phenomenon, we took a look at commute times because nobody wants to spend forever trying to get to the office.
Okay. Thank you for that information. Let us switch to what John here said. So Bitcoin ETF trading volume were released. So a quick search here on X Bitcoin ETF. Common results here. Vanguard not allowing their clients to buy Bitcoin ETFs is like a drug dealer not allowing their clients to buy drugs. It's a good one. Merrill Lynch, owned by Bank of America, is reportedly not allowing customers to buy spot Bitcoin ETF as per Fox. Okay, so apparently there are some pushbacks here. And then with regards to the volume, we've got these numbers here. I don't know if these are correct or not, but I presume they are. So the volume today, new record, $4.36 billion and counting. Grayscale being the number one here in volume. iShares Bitcoin Trust number 2, Fidelity number 3. And ARK-B, which is, I believe, an ARK Invest ETF, probably with this ticker, at number 4. So yeah, quite a good start. Quite a good start, I would say. But then again, couldn't really care that much, but yeah, quite a good start. Other than that, apparently Cathie Wood coming out with another one of those price targets. Cathie Wood continues to see $1.5 million Bitcoin price as Bitcoin ETF launches. Our base case, she says here, our base case is in the 600,000 range. Our bull case is 1.5 million by 2030. I always love to see the round numbers. How do you get there? I don't know. I mean, why not 598,756? Okay, I mean, how do you even calculate these numbers? There's no fundamentals behind this. It just means that more and more and more people are willing to buy that coin at higher prices. Because for it to go now from, what is it? $46,390. For it to go to $100,000, it means you need to find people that are willing to pay $50,000, $60,000, $70,000, $80,000, $90,000, and $100,000 for a Bitcoin. For it to go to millions, the same story. So yeah, we'll see. We'll see what happens there. Hopefully, those of you that are holding Bitcoin, you make a lot of money. And if not, then not. Just like every other gamble we make. Sometimes it works out. Sometimes it doesn't. I guess we'll see. But it's interesting to see these price targets always land on round numbers. I don't know how that happens, but it happens. What do we have here? Yeah, Microsoft has overtaken Apple as the world's most valuable company throughout the day. I believe that was already reversed. But yeah, I expected it to happen in 2024. I didn't think it would happen that fast already, but I'm not surprised. But Microsoft has more tailwinds than Apple currently. And Apple currently has lots of, let's say, bad momentum with it, with regards to the smartwatch, iPhone sales, stuff like that. But yeah, we'll see. I want to talk about this. This has been on my feed. I mean, I've seen it yesterday from Rabbit. I don't know. What do you think? What do you think about this device here? Do you like it? Do you know what it is? If not, actually, if not, maybe let me show you. So this is Rabbit Inc. Rabbit brings the future of human-machine interface. Order R1, which is it. By the way, this is already sold out in the first 24 hours, which is quite remarkable. It's 25 minutes, but what if we do it in 0.5?
I'm so excited to be here today to present to you two things we've been working on: a revolutionary new foundation model and a groundbreaking consumer mobile device powered by it. Our mission is to create the simplest computer, something so intuitive that you don't need to learn how to use it. The best way to achieve this is to break away from app-based operating system currently used by smartphones. Instead, we envision a natural language-centered approach. The computer we're building, which we call a companion, should be able to talk to, understand, and more importantly, get things done for you. The future of human-machine interfaces should be more intuitive. Now, before we get started, let's take a look at the existing mobile devices that we use daily. The one device that's in your pocket, the smartphones, like iPhone and Android phones. These guys have been here for years, and we've grown tired of them. The problem with these devices, however, is not the hardware form factor. It's what's inside. The app-based operating system. Want to get a ride to the office? There's an app for that. Want to buy groceries? There's another app for that. Each time you want to do something, you fumble through multiple pages and folders to find the app you want to use.
Wow, 1 second here. First of all, let me answer to John. Very surprising it sold out. Not surprised. Not surprised at all. They were genius at marketing, at presentation. Very, very well done. And the best thing they did is what you will see at the end of this video. The best thing they did is the price tag at $199 with no subscription needed. That's the only reason, in my opinion, why this has sold out and why this has a lot of demand right now. Now, what he's talking about here right now, right? The phone. This thing right here, the phone. The form factor is not the issue, right? We love the big screen, which is a negative for his device, right? It will never replace the phone since it only has a small screen. I will not be able to watch my cat videos on a small screen. Second thing, he talks about having too many apps, right? Too many apps. If you want to order food, it's one app. If you want to navigate, it's another app. If you want to talk with people, it's another app, etc., etc., etc. So his solution here is to have this little device, you talk to it, instead of having all these apps, you just talk and get your answers separately. I mean, separately, without having to access all of these apps. Now, I don't know about you, but I don't want one device to have control of all of my stuff, which is one of the red flags here. But let's continue.
And there are always endless buttons that you need to click. Add to the cart, go to the next page, check the boxes, and jumping back and forth, and so on. The smartphone was supposed to be intuitive, but with hundreds of apps on your phone today that don't work together, it no longer is. If you look at the top ranking apps on app stores today, you'll find that most of them focus on entertainment. Our smartphones has become the best device to kill time instead of saving them. It's just harder for them to do things. Many people before us have tried to build a simpler and more intuitive computers with AI a decade ago. Companies like Apple, Microsoft, and Amazon made Siri, Cortana, and Alexa with these smart speakers. Often, they either don't know what you're talking about or fail to accomplish the tasks we asked for. Recent achievements in large language models, however, or LLMs, a type of AI technology, have made it much easier for machines to understand you. The popularity of LLM chatbots over the past years has shown that the natural language-based experience is the path forward. However, where these assistants struggle is still getting things done. For example, if you go to the ChatGPT and use their Expedia plugin to book a ticket, it can suggest options, but ultimately cannot assist you in completing the booking process from start to finish. Things like ChatGPT are extremely good at understanding your intentions, but could be better at triggering actions. Another hot topic is a field of research around what they call agents. It has caught the eye of many open source projects and productivity software companies. What remains to be solved is for these agents to perform tasks end-to-end, accurately and speedily. The problem is forcing a model to perform a task it is not designed for, whether for a language model to reason about web page using super prompts or screenshots. We have yet to produce an agent as good as users simply clicking the buttons. To fulfill our vision of a delightful, intuitive companion, we must go beyond a piece of complex software. We want it to be in the hands of everyone. So we set out to fundamentally understand how computer apps are structured, and more importantly, how humans interact with them. We wanted to find a way for our AI to trigger auctions on behalf of users across all environments. We want it to be universal, not just a Chrome plugin or a limited set of apps, but everything, iOS, Android, and desktop. These applications share something in common, the interface. They all have a user interface. So at a philosophical level, if we can make an AI trigger actions on any kind of interface, just like a human would, we will solve the problem. This insight led us to create the Large Action Model, or LAM, as we call it. It is a new foundational model that understands and executes human intentions on computers, driven by our research in neural symbolic systems. With a Large Action Model, we fundamentally find a solution to the challenges that apps, APIs, or agents face. We solve it with interfaces. LAM can learn any interfaces from any software, regardless of which platform they're running on. In short, the large language model understands what you say, but the large action model gets things done.
Okay, let's unpack a little bit. First of all, no-name AI hype at its best need to work on an AI toilet. Yeah, what is it going to do? Go to the toilet for you? But no, look, overall, this concept is good. It's a good concept. I like seeing these types of things because it has been quite a while and since, I mean, a company has come out with a new product that creates a lot of buzz. It's true that Alexa, Cortana, Siri, Google AIs, Bixby, whatever, it's been out for a while, yet they all suck. They all suck. Google is fine, Alexa is fine. But other than that, more than fine, they're not. So he has a point. He has a point here. But if you think that none of these companies, which basically own the whole AI cloud LLM business right now, if you think that they're not working on something like this, which already works in devices that billions of people have around the world, you are just lying or lying to yourself. Because I can promise you that, I don't know when, a year or two from now, maybe less, I don't know, you will be able to ask your AI assistant to book you a ticket. I mean, yes, you have agents already right now that can do that. I'm not people agents, AI agents, like he said, that can do this right now. But of course, you need to be a bit technical for that, etc., etc. Here, you talk and it does it for you, which is great, which is excellent. But again, to think that this will destroy what we have today, very, very naive. To me, this is a nice gadget to have. Like I did a post, Zune, right? The so-called iPod competitor. Zune was a cool idea, right? It sold, I think, 2 million devices or so. Even the iPod, great, incredible. Very, very useful as first because there was nothing else. But then what happened? It got killed by an app. Spotify, Apple Music, YouTube Music. You don't need an external device. It's on your phone. Just like this. You will not need this gadget. It will be on your phone or in your smart glasses. So yeah, it's cool. It's cool. If I could have bought it, I would have probably bought it just to show you on the channel. But it's not shipping worldwide.
We use LAM to bring AI from words to action. Finally, we can build a computer that, in addition to understanding what you're trying to say, can actually help you do things on your behalf. We'll pack the large action model into an advanced RabbitOS operating system. It is built for real-time interactions between you and the Rabbit, powered by LAM. Large action models concept and test results are so powerful that we decided to make a one-of-a-kind mobile device. Introducing R1, your pocket companion.
Very Apple-esque.
Is the Rabbit R1. Designed in collaboration with Teenage Engineering, the R1 is a fully standalone device, primarily driven by natural language. The accumulation of countless hours of work from our research, design, and software teams. It is simple to use. R1 is equipped with everything you need to interact with you and perceive your surroundings. It comes with a touchscreen, a push-to-talk button, and an analog scroll wheel, a microphone and speakers, and a computer vision-enabled 360-degree rotational camera we call the Rabbit Eye. It is Bluetooth and Wi-Fi capable, and it has the same card slots that supports global 4G LTE network. And now, let's see how it works. I can ask Rabbit for anything, just like if I'm using ChatGPT. The difference, though, is the speed. With RabbitOS, I get a response 10 times faster than most of the voice AI projects. Rabbit answers my questions within 500 milliseconds. With the push-to-talk button, you don't need to say anything to wake it up. Just press and hold the button and talk, like a walkie-talkie. Now, let's give it a shot. What's the nature of the reality?
The nature of reality is a topic that has captivated the minds of philosophers and thinkers throughout history. According to Bertrand Russell, reality is composed of hard data derived from sensory experiences and logical analysis. It is the amalgamation of our perceptions, thoughts, and the external world.
I can speak or type with R1. If you shake R1, a keyboard will pop up. You will also know that the response speed is much faster than using some of the LLM assistant apps with web browsing, such as ChatGPT. What's the stock price of Coca-Cola?
Searching for the stock price of Coca-Cola. The stock price of Coca-Cola, KO, is $59.76.
Who played the role Oppenheimer in Christopher Nolan's latest movies?
In Christopher Nolan's most recent film, Oppenheimer, the role of J. Robert Oppenheimer is played by Cillian Murphy. The film is a biographical thriller that explores the story of American scientist J. Robert Oppenheimer and his involvement in the development of the atomic bomb.
Now, let's see how the large action model works. With LAM, Rabbit R1 can interact with all kinds of applications. Introducing the Rabbit Hole web portal, I can log into different services and unlock functionalities for R1. It's just like iCloud. Let's say I want to listen to some music. With the Rabbit Hole web portal, I have complete control over which services I want to activate on my R1 and which provider I prefer. For music, I use Spotify. So let's go ahead and connect my Spotify to the Rabbit Hole. Now that this is Spotify login page, before I start the login process, I want to emphasize our commitment to privacy. The way we design the infrastructure for apps that we interact with, we don't create fake users or spam users. We don't hack their infrastructures. And of course, we do not store any of your third-party credentials. Instead, we redirect you to their login page. We never save your username and password, and we don't track your data. The authentication happens on the respective apps. Now I'm logged in with Spotify. RabbitOS recognized that Spotify has been authenticated on my device. Before this presentation, I pre-authenticated some other apps like Uber and DoorDash.
So here again, you see, it's great, right? You push the button, you ask the question, you get the answer. Fine. Now, I don't know about you, but there is this thing here on ChatGPT where you can also ask questions. So, for example, hello, can you explain to me who was Napoleon Bonaparte?
Certainly. Napoleon Bonaparte was a French military and political leader who rose to prominence during the French Revolution. He became Emperor of the French in 1804 and led France in various military campaigns, gaining control over much of Europe. His rule had a significant impact on the political and legal systems in many countries.
Thank you.
You're welcome. Anything else you'd like to know about Napoleon Bonaparte?
So as you can see, this is something that already exists. And this is, by the way, on ChatGPT, not even the plus version, not the premium, not nothing. This is all on my phone. And again, he just showed you the extra step that you have to take. You have to connect that device to your computer to log in into all the apps that you want to use. Again, this is an extra step that the average user or the majority user does not want to do. It wants to go on the phone and do everything on the phone, not connect on your PC, on your computer, on your laptop, whatever, to go and log in. And then with regards to data protection and stuff like that, yeah, I don't really trust all of that, but okay.
Just choose your preferred services and log in through them to get authenticated on your device. It's that easy. Now, let's play some music. Play Kraftwerk's Pocket Calculator.
Playing Pocket Calculator by Kraftwerk for you.
Play another song from the album.
Sure, playing Computer Love for you.
That's all the tracks from the same album. Who wrote the lyrics for this song?
Ralph Hutter and Emil Schult wrote the lyrics for the song Computer Love by Kraftwerk.
Which band sampled this song?
It seems that Coldplay's Talk is the only known example of a song that sampled Computer Love.
What do you think about this song?
Computer Love by Kraftwerk is widely regarded as a groundbreaking and influential song in the realm of electronic music. Its fusion of catchy melodies, robotic vocals, and innovative use of synthesizers has left a lasting impact on the genre.
I can also use R1 to call a ride. Get me a ride from my office to home now.
Of course, I will book an Uber ride for you from your office to your home. Please confirm the ride.
I have 6 people with 3 baggages. Find me an Uber that can fit all of us.
For 6 people and 3 pieces of luggage, I recommend booking an Uber XL as it provides ample space for all passengers and luggage. Please confirm the ride.
The ride shows up, I just hit confirm. The Uber's on my way. I can also use R1 to order food. Get me a 12-inch pizza from Pizza Hut delivered to here. The most ordered option on the app is fine.
Ordering a 12-inch pizza from Pizza Hut. Since you mentioned that the most ordered option is fine, I will select that for you. I just created an order for a 12-inch pizza. It's going to be hand-tossed with a classic marinara sauce and topped with regular cheese. Please confirm your order.
That sounds really good. I just confirmed the order here. Now I'm waiting for my pizza.
What? You order a ride. First of all, how does that device know where you are? Question. Second of all, you just order a pizza without even knowing? How? What? Just order the most popular pizza, but it again, presentation-wise, great. Again, presentation-wise, incredible. Very cool. Fits the hype. But I'd like to see a picture of the pizza, the style of the pizza. So yeah, again, I rather use the app, to be honest. I'd rather use the app because maybe I want to add some toppings after that. I don't know which toppings I'm allowed to add. Maybe I want to order a drink as well. So yeah, simplifying these things. Again, it's a presentation. It's meant to sell, which they have done a great job.
I can also make R1 to a set of more complex actions that may take multiple apps to finish on a smartphone. For example, if I want to plan a trip to London, I can just describe what I wish in full to R1. I want to take my family to London. It's going to be 2 of us and a child age 12. We're thinking of January 30th to February 5th. Can you plan the entire trip for me with like cheap non-stop flights, grouped seats, a cool SUV, and a nice hotel that has Wi-Fi?
Exploring ticketing options to make your trip a reality. For your trip, I found various flight options, a range of hotels to choose from, and car rentals available. Please confirm each option individually for further details and booking.
So it's all been planned out. I just confirm, and that's it. Could you come up with a schedule for fun things to do while I'm over there?
On it.
No. At first he disses Expedia's ChatGPT plugin, which could do exactly what he just did. And now when he asked the thing, which answers him in more than 500 milliseconds, he doesn't show us what he's confirming, meaning probably it's not giving him exactly what he wanted. So yeah, I'm new. What is this? This is it's called the Rabbit R1. It's a nice little gadget that is powered by AI, not LLMs, but LAM. It has a camera, speakers, microphone, a touch screen, a scroll wheel, and one button. You basically talk to the to the gadget, ask whatever you want. It answers. It can book you tickets apparently, order you a pizza, an Uber ride, play you songs, etc., etc., etc. It's meant to replace all the apps on your phone because apparently that's what people are looking for these days. So yeah, that's a major overview. Again, very cool gadget.
I have prepared a detailed travel plan for your trip. In summary, you will be exploring London's iconic landmarks, visiting museums, enjoying delicious meals at local restaurants, and experiencing the vibrant atmosphere of different neighborhoods. Navigation details are also prepared, and I can help you book tickets for any events you'd like to attend.
R1 just planned the entire trip for me. That's awesome. But it seems like this is a little bit too intense. Can you plan an easy schedule for us?
Sure, I'm working on it.
ChatGPT does that as well, by the way.
Please take a look at it and let me know what you think.
It gave me a more relaxed schedule every day with all the details. Sounds really good. And I just confirmed that.
I can foresee a wonderful trip.
Isn't that cool, huh? R1 can help me reach others just like a phone, but smarter. It comes with a built-in real-time translator and a note-taker, removing the final barriers to communication. R1 automatically detects the language spoken in the environment and provides the bi-directional translation. R1 has an eye, an onboard camera designed for advanced computer vision. It can analyze surroundings and take actions in real time. To activate the eye, just double tap the button. Oh, funny seeing you here, Rick.
Let me take a look. Never gonna give you up. Playing now, enjoy.
What? Am I getting Rickrolled in my own keynote? Let's move on to the next one. This is what I got in the fridge. Can you make me a nice dish that's low in calories?
Let me see. How about a green garden omelet? It's a delicious and low-calorie dish that combines the freshness of broccoli and cabbage with the creaminess of eggs. Here's a simple recipe for you.
Nice. It recognized all the stuff and gave me the actual recipes. Rabbit Eye can also help you with your documents.
This was good. This was great. This is something that Meta AI has been presented with as well, which you will probably be able to do with the glasses from Ray-Ban. But again, he's ignoring the fact that this already exists.
Here's a table I've been working on for job questionnaire. Can you create an additional column that matches candidates who mentioned Rabbit in their questions about how they found us?
Sure, let me take a look at the table and add the matching column for you. I've processed the table and sent you an email with the results.
Okay, now let's check our email. I can continue to interact with RabbitOS even beyond R1. Let's reply this email directly. Can you add another column that matches candidates who have included Rabbit in their question and are LA based? I just replied the email, hit send. And I got a refined version from RabbitOS through my email. Let's say I have a unique routine or task I can now do on my phone. R1 can do that too. We are experimenting with what we call the teach mode. Just like how I can teach my friend how to skateboard, I can show R1 how to do it, and it will learn from me. This means that any user, regardless of technical background, can teach R1 to learn new skills. So you go to teach mode, start a new session. Today, I will show you how to generate an image of puppy using Midjourney from a prompt using Discord. First, I will go to the servers.
So here again, it's a small, cool gadget, but what he's doing right now, you will be able to do on your phone. Since you only have a very, very small screen and it's a small gadget, you cannot do that on that device. This device will only make people even more stupid. Nah, I don't think it will make a difference. I think people are already stupid as it is with their phones or with whatever. I don't think that device will change much. And anyways, we're going into that future, right, where we just ask our AI assistant to do stuff for us. So I don't think this will accelerate stupidity.
My own servers. Since this is only a general image generation, I'll go to Midjourney text channel. Then I will use the image command along with the prompt. Here I'm putting a cute baby wild dog with big eyes, animated cartoon. I will then explain to RabbitOS how to use this rabbit and annotate it so that I can generate anything, not just puppies. So let's go back to our web portal, journey through teach mode. Watch, learn, and repeat. That's teach mode. It's that simple. That's all the demos for today.
This is a bit the technical side of things. But yeah, this is basically what you get with this product. Again, pretty cool. Very cool. I'm not going to lie. Very cool. And the best thing here, he compares to a phone. Of course, this is not a phone. Smart glasses. By the way, these glasses can do most of the things he just presented. But yeah, this is the best aspect of all of it. The fact that it is $199, no subscription needed. I think that's the best. That's the selling point here. People are paranoid, thinking Google and Amazon are listening to them. This will not fly with people. Man, you overestimate what people actually care about. You overestimate what people actually care about. The majority of people have zero issues of being on TikTok on a daily basis. So yeah, and Amazon and Google are selling their products, pretty well. So don't overestimate people's so-called fear for with regards to the data stuff. If it makes your life easier, you will take it. You will use it. And TikTok is a big example here. The big example. So yeah, got more questions? Let me know. Do you believe the bank earnings tomorrow could influence SoFi price action? I don't think it's going to influence just SoFi's price action. I think it's going to influence the market as a whole. But yeah, I don't even think it's underreported. I don't even think it influenced SoFi in the past either. Still a big difference between traditional banks and SoFi. So no, I don't think so. Do you believe they underreported the CPI number? No, I don't believe that. I don't think that there is such a thing of underreporting CPI numbers. It's lagging indicator. That's all. Which of the current AI is a potential winner? Yeah, ChatGPT, of course. ChatGPT, Bard, Meta AI. Everybody's still waiting for Apple to come out with their own thing. I think they're maybe traumatized with how bad Siri is, so probably they're taking their time. But I feel that with Vision Pro coming out, they're probably going to work on. They're probably already working on something. But yeah, I think those are the big winners. Again, it's going to be a pretty easy thing to copycat, to copy stuff, since a lot of, Llama 2 open sourced, sort of. So yeah, we'll see. But probably ChatGPT is already pretty good. Bard can be much better, even though Bard, the normal version, is 10 times better, in my opinion, than ChatGPT without paying, because it has access to Google. It actually gives you real-time data. So yeah. And then winners, of course, you have NVIDIA, a big winner. So yeah, that's that. Unless I have misunderstood your question, that's my answer. Yeah, it's funny. All the is Snap a buy? I don't know. I don't like the company. Definitely a revival in the last year, up 81%, with the majority of it, maybe not the majority, but yeah, the majority of it up 93% in the last 3 months. Again, even when it was much lower, where was it? Yeah, at these prices, Meta still a better play. Still a better play. I mean, it's just a dumb app. Let's be honest, very, very stupid app. If you want to message someone, just send them a WhatsApp or a what do you call with Apple, iMessage, or a DM on Instagram. I mean, this Snapchat thing is really stupid. But then again, they are very lucky that a lot of sex workers use that app as one way to distribute their how should I say this, merchandise. So yeah. Definitely doing better. Definitely doing better. Pretty expensive right now though, but doing better than before. Their subscription are working quite okay. Average price target sits close to 20% lower than the price we're at today. Yes, no, Palantir is an AI play as well, but I don't think Palantir will be a consumer like you and me using Palantir on a daily basis. I was purely talking about ChatGPT, like Meta AI, stuff like that. But yes, Palantir, of course, is in the Meta, is in the AI discussion. Do you have any thoughts on NIO? Which side could it be headed? I mean, I did talk about NIO, the expectations for 2024 not so long ago. I don't think the stock has moved much. No, it has gone down actually. $7.40. So yeah, it has dropped quite significantly. I mean, the last numbers that we've got for NIO were positive, meaning they beat their own guidance with regards to deliveries. So that was good, but apparently the market doesn't really care much. Probably because of the dominance of Tesla and BYD in China, which is still NIO's main market, and even there, they're not really doing the best that they can. Too many players, in my opinion, too many players. And like I said, the fact that they focused on NIO lifestyle and NIO phone and stuff like that, just stupid. They did make some good commentary in the last earnings call with regards to cost cuts, restructuring, battery, stuff like that. But still, just because this company is public doesn't mean it needs to be considered as a play. If you want to play with cars, go with BYD, go with Tesla, go even with Rivian at this point. But yeah, plus it's a Chinese company, so you never know. But yeah. Way too many people have been burned with NIO just because they thought this is going to be the Chinese Tesla, and they missed out on Tesla, even though Tesla then went up as well. So yeah, stop chasing what could be the next thing. Yes, it did go up quite a lot, but since then it is down quite a lot as well. So that's my thought on NIO. Interesting company to follow. I just don't believe a lot of the things that they're saying, especially in the latest presentation. They said, oh, our autonomous chip is much better than that of NVIDIA, but they forgot to mention that they compared it to the already existing NVIDIA chip, the Orin one, while completely neglecting the fact that NVIDIA is already working on and will be releasing the Drive Tour, I think, later this year. So yeah, don't really trust them that much. So that's my opinion on NIO. I know a lot of people like NIO because, well, they've been dragged in. It's also a type of cult, just like Tesla, by the way. So yeah, that's my thoughts on this. By the way, I recently watched your video with Crossroads on PayPal and really appreciate the insight. Keep it up. Thank you very much. He will definitely come back on the channel. Probably after the earnings report and earnings call. We will schedule another video. We will probably do this live. so you get to ask questions later on. But thank you for the feedback. Really appreciate it. Tesla is down, heading for the 160 or so. I think we still have time until we reach 160, for being honest. It's not the only thing that is down, by the way, today. Plus, there is earnings at the end of the month. A lot of things can change. If you want to have a better look, let's look at the graph. We have now gone under the 200-day moving average, which was around $230. So next up should be $215 or so. That has been a support-ish area. So yeah, be on the lookout for that, unless on Friday we can have a nice rebound. But with all the news we've gotten more recently, I don't think we can recover this week. If we look at the daily, also doesn't look that great currently. So yeah, be on the lookout for another, what is it? To be specific, another 5% drop. So not such a big deal. Not such a big deal. If it goes lower, it goes lower. Great. If it doesn't, it doesn't. I'm focused on the business. The stock will do what the stock will do. Of course, yes, we do love to see the stock go up and up and up. But in a realistic world, the stock doesn't always go up non-stop. Sometimes it has pullbacks. Sometimes it has to do with the company. Sometimes it has to do with the market, and sometimes it has to do with lying headlines. So yeah, are you still long Twilio? I have not been long Twilio since what was it? Summer of 2020 or something like that. So no, I'm not long Twilio. And Twilio also is one of those companies that I think we had rumors about. Maybe some private equity firms wanting it to go private, or wanted to take it to go private. We'll see. We'll see what happens with that. Definitely a company that has taken a hit when there is a market downturn, not stock market, but economic downturn, should I say. Because of the clients that it attracts, so lower spending and stuff like that. You're welcome. You're welcome. By the way, I'm not trying to be negative or something, just realistic speaking. Would you ever share what your top portfolio performance? I share it every day. It's it's on my pinned post on X. This is what it looks like. It's been, and by the way, I retweet it so you can track it each and every month. Unless nothing changes, then it's each and every 2 months or 3 months. But you can go back, I think, over a year of these types of posts. So yeah, 33% Tesla, 16% Amazon, 7% Meli and Meta, so 14% together, and then the rest here plus the dividend portfolio. So yeah, it's there. Tesla. The question here is, where do you see Tesla as fair price or undervalued? So close to earnings. I mean, even right in, it's how can I say this? Let me answer this question while showing you this. This is Tesla with the compared to its 5-year mean. What you see here, it's cheaper than its 5-year mean on a forward PE, EV to EBITDA, price to sales, price to free cash flow is a bit more expensive currently, but yes, pretty close to its mean. And this is despite 2023 being a pretty harsh year for the automotive sector. This is despite price cuts. And yet, compared to its 5-year mean, Tesla seems to be in a okay, fair price area. $100 that we've seen a year or so ago, yes, extremely undervalued, in my opinion. But still, even then, you've heard people say, oh, super overvalued, should be going to $60 or $80. Just stupid talk that follows sentiment. The thing is with Tesla that if, yeah, I know it's a big if, but if they execute on everything that they plan on doing, even now it's undervalued at $722 billion in market cap. But again, there's still a long way to go. Compact car needs to come out eventually, because that's the big deal here, the big change. Not a lot of people can afford $30,000-$40,000 cars. $20,000-$25,000 cars, it's already something else. Then energy side of things, only 10% of revenue right now. Supposed to be as big as the car business, right? Give it some time, take some time. High margins as well. I'm not even going to talk about FSD. This is something I've been saying for 2 years now. I'm not even counting on FSD right now because of all the promises that were made and the under delivering of it. Even on the website right now, it still says that when you buy the package, the autopilot package, you get auto park, you get summon and stuff like that. It doesn't work. So why do you keep it on the website? Say upcoming features, something like that. So I'm not talking about FSD. But then again, Optimus, a year or so ago, 2 years, the first time we watched it was a joke. Nobody really thought about this becoming a reality. A couple of months ago, we got that video and I was like mind blown at the progress of Optimus. And if that works out, it's going to be even bigger than what the company is worth right now. Again, if that works out. So yeah, there's still a long way to go. It depends on your time frame with Tesla. If you're not in it for years and years, if not decades, then maybe this is not the stock for you. But yeah, I mean, not compare it, but look at Amazon, for example. For 4 years and years, people will say, oh, this company is garbage, margin are super thin, blah, blah, blah. But they have operational leverage. They have AWS. Now they have advertising, subscription, logistics networks that is unmatched. And now you're seeing Amazon flexing its profitability muscles. Yes, Tesla is going through some rough period, but yeah, I've seen worse. Hi, Martini. Hi, Couch. Can you explain what you mean when you say most gaps are filled? I understand what most technical terms. Okay, so with, by the way, I'm not a technical analysis genius, far from it. But let's say we look at this right here. Do we see this? Yes, we see. This gap, this is a gap, for example. This. Poof. This is a gap. Basically, the stock closes at one price on, let's say, Monday, and open ups much, much lower or much, much higher on Tuesday, which means there is this gap right here, or the price difference that happened overnight. Now, there is a saying that that most gaps do get filled, but not all of them. As you can see, this gap got filled. I mean, this was October 18. This gap got filled November 15. As you can see, the stock here went up, filled that gap. Even though we had a small gap here, that was filled a couple of days later, and is now getting filled here as well. You even see gaps I think on a weekly I saw one. I don't know where. Maybe less on a weekly, but I mean, even here, see a little gap, but not that much. That's basically what I mean with gaps. On the daily, of course, you can see this much more on a daily. I mean, if we go back here, 2023, you got a gap here. Poof. Stock price was at $180. Next day, back $165 or so. When did that get filled? Well, this was April 20. It got filled approximately mid-May, fully filled. So that's basically it. With what I'm saying, with most gaps that get filled. Not all, but most. Because sometimes, I believe, even if I think NVIDIA has some gaps that never got filled. Yeah, I mean, here, look at this. NVIDIA, this is a gap back in May 2023. A gap from $305. This is when they guided for that huge revenue upside. So it went from $300 to $370, just like that. And as you can see, it never got filled, not even close. So yeah, that's basically it. Do you sell options? No, I do not do anything with options. Never did, and probably never will, unless I really want. But no, never did anything with options. It's definitely a financial skill that is pretty useful, but I rather focus on what I know, which is buying businesses, stocks. Sometimes I make mistakes, but most of the times I do not, which is why I love this thing. With regards to NVIDIA, by the way, this red candle here, again, there was a buying pressure, but apparently there were selling pressure, but apparently there were more buyers than sellers today, even if that's a red candle. On the daily, we are overbought, by the way, with regards to NVIDIA. It also, come on, give me that. Also broke out of that resistance here at $500. This was basically where I made my video, where I say the AI bubble popped, just a clickbait video, title, not video, where I said that if you hold NVIDIA, just hold it. If you want to buy it, there are probably some better options out there because of the, I would say, limited upsides. This company will still perform quite well. But yeah, for the next 6 months or so, 5 months or so, this company has done basically nothing until the start of this year. It's up 10%. Congrats. Still an amazing company. But if you're looking to buy something new, there were probably better options out there if you're purely looking for upside. So yeah, that's basically what I meant. So yeah, if you got more questions, put them in the chat. Put them in the chat. I think Tesla Daily's video today will be pretty interesting, with all the bad news that has happened. Even solving the money problem, I wanna I wanna listen to how he will twist it into some positive news. What key variables do you use to value a company like 4PE, etc.? It depends on the company. There are some companies where looking at 4PE just doesn't make any sense because there is no E, right? Some companies, software companies, you want to look at price to sales because sales is important, since we know that software companies have high margins. So you want to see, this chair is horrible. You want to see sales growth, for example, with Palantir. So it depends on the company, but I want to see growth. If there is already possibility for free cash flow, then increased free cash flow, good management, good track record, industry that is expected to grow. So imagine you're looking for a company and the industry is not expected to grow that much. Yeah, well, if you're a new player, congrats, you're growing into a stagnant industry. So yeah, it depends. Valuation is definitely not the first thing I look at. That's for sure. Eventually, yes, because you want to enter at a good price. But studying the business itself, the industry, and looking at management's track record, that's more important, in my opinion. Yeah, that's it. I mean, it's going to be very fun to watch when suddenly Tesla reports earnings and we see a better margin than expected, or the comments on margins are better than expected. Suddenly all the sentiment will change. Suddenly the price cuts didn't matter anymore, and all of that. But again, my expectations are quite low at the start of this year, especially now with the news that we've gotten with regards to the Red Sea shit. So we'll see what happens. Will you consider sharing your average return over the years? I could. The problem is you will not get the fair answer because I've moved from brokerage to brokerage. So you will only get my last year's return, which again is not really fair because last year everything went up quite fast. And I think my portfolio did 80% last year. So that's not, I mean, I can show you which will make me a genius, but that's not really fair. So yeah. Plus, how can I say this? Plus, there are some private stuff there that I do not want to show the public. Maybe in the future when those are gone, but right now, no. So there is that. You could trust me, if I could, I would. But I mean, I have zero problem showing you a performance of 80% in a year, which again would make me look like a genius, but it doesn't take into consideration all the other mistakes I've made throughout the year since 2016, which I've made some mistakes. So yeah. But overall, I'm up. But then again, I started in 2016 with 5 digits, and now I'm 6 digits in the portfolio. So it's all obviously thanks to Tesla. Since I bought it in 2019, stock has done quite well. And since it is 30%, it was 50% of my portfolio at one point. Again, the results are, of course, extremely good. But it doesn't show you the mistakes I've made, which I've made, again, big mistakes. Still have some mistakes in my portfolio. Bought Fiverr, too expensive. Bought Lemonade, too expensive. Still down 50% on those. So yeah, there is that. But overall, I'm outperforming. That's the most important part. I mean, if you look at the stocks that I own, you can figure out the performance. What do you think about Cathie Wood's methods? Look, again, she's a long-term investor investing in, I would say, riskier stuff. Riskier stuff in the sense that it needs time to play out. 5 years, she says. So yeah, she made also mistakes by buying stuff too high. Roku, Zoom, Teladoc, lots of bio stuff. The thesis could work out. Just the price you bought it just didn't make any sense. She was right with Tesla. Congrats there. But yeah, I mean, I can understand why she gets a lot of attention because she has crazy price targets and stuff. I mean, I think the Zoom price target is ridiculous. The Roku price target is ridiculous. But at least there is one analyst here or investor that goes out, takes the risk, and talks about innovation. Instead of the usual analysts that are just BSing their way around, always saying the same stuff, blah blah blah, marketing. I mean, I like Dan Ives, but let's be honest, all of his notes and the titles of it is pure marketing stuff, repeating the same thing. Price drives sentiment as well. So yeah, her methods could be better, but if she changed her method, she probably wouldn't have found things like Tesla. But yeah, mixed bag, I would say. Because of some of the entry points and some of the ridiculous price targets. And again, maybe, I don't know, maybe 5 years from now, 3 years from now, she will be right. But I highly doubt the Zoom and Roku scenario will play out. I highly doubt that. The Tesla one could very well play out, the most realistic one. But yeah, that's about it. I mean, what are the expectations for Tesla right now? The average price target, $238, which is a bit higher than where we were 1 year ago. 1 year ago, the average price target was 216. The lowest one was June 2023. The average price target was $188. Really? Huh. Interesting. Again, it shows you the price drive sentiment, right? We were here at around, the price target was around the same price of the stock, and then suddenly when the stock goes up super fast to $290, suddenly we see an increase in the average price target. I mean, you can't really make this shit up. This is ridiculous. Which is also why you shouldn't really focus on price targets, because they serve as a way to attract investors to get on CNBS, to get on Yahoo Finance and stuff like that. So yeah. And then you have people like Gary Black, which you can like it, you can not like him, whatever. He always needs catalysts. I mean, all of his posts, Tesla, catalyst here, catalyst there, always looking for catalysts. I mean, come on. Just let the business do the talking, and that's it. Apparently here Kelvin Yang says, rumor Tesla China is cutting prices tomorrow. Last time China raised prices, weekly order was around 15,000. Last week it was 7,000. This isn't an isolated Tesla issue. Basically, across the board, car makers is seeing half the order level in week 1 of 2024, which, okay, I mean, start of the year is always a bit slow, even though the Tesla insurance numbers for the first week were pretty okay, in my opinion. Probable reasons include there was likely a pull forward effect on end of year push, and the Chinese New Year this year is a bit late in Western calendar. Its seasonal high is delayed. Okay, interesting. If we look at Piloli, Piloli here has, where is it? This will obviously feature in the weekly video. But yeah, look, first week, January 1 to 7, China reported 3,200 insurance. Which, if you look here, you can't really see it, but yeah, I mean, it's better than last year. It's better than last year, not that far from 2022. So I don't really see why people are panicking. It's better than Q4, better than Q1 2023, and a bit of the same Q3 2023. So yeah, I don't know why. I don't know why they are panicking. But okay, that's that. Anyways, thank you all for joining. A bit of a boring stream, I think, because there was really not that much to talk about today, besides the thing that we did touch on. Do you explore micro cap sub 1 million companies? No, I do not. Unless some of you find something interesting and write it in the chat during the live stream. No, sub 100 million, I rather not. $1 billion is fine. $500 million is fine, and upwards. Because I still think, I mean, it's pretty risky to go the $100 million companies. Of course, that could be 100 bagger, right? Could be. But no, that's my answer, unless you find something great. So with that said, thank you all for joining, and I see you all tomorrow. NVIDIA's video, very, very exciting video. I hope you like it. And I'm not sure if I'll be able to do a live stream tomorrow night. We'll see. Otherwise, Saturday is Tesla Weekly, and then maybe Sunday, a chill live stream, gaming, sports, and stock talk. Thank you very much. See you all in the next one. Bye-bye.